Everyone, Jordan Rosenberg here from Bierman Law. And today, very special guest and old time friend, Sam Pollack. And Sam is, right now, he is at the Peach Financial Group affiliated with Guardian Life as a wealth manager. And what's very cool about Sam is he used to work at FGMK as a personal and small business tax professional and manager. And recently, within the last year, has made a huge shift in his career from the tax side to more of the wealth management side, and really pursuing, I would say, a passion and kind of getting out of something that maybe you weren't as comfortable with, but now we're really pursuing something that you are comfortable with. And that's really cool. And I admire you for that. But the reason I have Sam on today is because recently reconnected with him, and there's a ton of synergy in between divorce and the financial realm. And I always tell my clients that, it's really important to have a team of professionals in your corner that you can rely on. And following a divorce, sometimes obviously one family becomes two, and everybody should, learn how to manage their own affairs if they don't know already, and have their own individual professional for that tailored advice. So Sam, welcome, and thank you so much for coming. Appreciate it.
Thanks for having me. Really appreciate being on. And yeah, just to add to what you said, a lot of times the reason that people really take the initiative to talk to someone like me is a change in their life, right? And it's hard to imagine a much bigger change than someone who's going through the process of divorce. So that's a big opportunity to start having a conversation with somebody that you can trust and who can help you get organized.
Absolutely. And so, Sam, even just before we talked, I know you've got some disclosures that you have to get out of the way as a financial professional. So go ahead and do your thing.
So as Jordan said, so I am a financial representative with Guardian Life Insurance Company of America, a registered representative and financial advisor with Park Avenue Securities. The show is for informational purposes only, and that individual situations may vary. Should only be relied upon in coordination with individual professional advice. This does not constitute an offer or solicitation of a product or service, and state that I will be expressing my opinions today, not necessarily those of Guardian or Park Avenue Securities. And that's it for the disclosures on my end.
Awesome. Thanks, Sam. I appreciate everyone's patience and going through some of the formalities. So Sam, start with just the basic overview. So what is wealth management? What is being a financial advisor? And what's the relationship that you form with your clients in terms of how you help them?
Absolutely. So on the one hand, it can look a lot of different ways with different advisors and for everyone's individual situation. But what I like to describe what I do is I help people improve their financial balance. To me, what that means is making sure that everyone has the financial tools in their arsenal to be able to deal with any situation that comes up, even the unexpected circumstances. It can start, a lot of times I run a profession, I run a protection first practice. So it can start with life or disability insurance analysis, savings, cash flow strategies, retirement planning, helping restructure some debts on the individual side. And as you said, with my background as a CPA, I'm also able to help with some tax advice. So the first thing that I'm always going to do is I help people get organized. We take a look at where you're at right now. Have to be able to have an open and honest conversation about what's going on in someone's financial world. That's imperative. And starting with that trust and that help. And that's the organization piece is a lot of times the first place that people need help. You can kind of feel a little bit like your finances are like that junk drawer in your kitchen where you have menus and all of that other stuff and you know what's in there, but you don't know exactly what it is. And you need someone to kind of help you get everything together to get your arms around it.
Yeah.
And in a nutshell, that's ultimately what I'm trying to do.
Yeah. It's so valuable, at least to my clients, because coming off of, a big event like a divorce, it's a catastrophe, your head's all over the place, and maybe you weren't the one who was principally involved with the finances. And of course, most times at the end of every divorce, there's a settlement agreement where there's some division of assets. And just like you said, so important to be able to organize that, contextualize it and digest it and say, well, look, this is how much I'm getting every month in support. This is how many assets, what I have in terms of assets. I am awarded a whole life insurance policy. I'm awarded some retirement. I'm awarded some brokerage accounts. How does all of that play into a bigger picture strategy in terms of how to make your money last as long as possible? And even budgeting. right? That's huge. And that's a very common concern of some of my clients where they come out and they say, I don't know what I can afford. So to be able to have that strategy in dealing with someone like Sam, super, super helpful. And one of the things you said, Sam, is this that I liked is in order to be effective, it really requires open and honest discussion with your accountant or your financial advisor, because that's the only way that you can create the strategy for them, right?
Yeah.
Same
100%.
concept with a divorce lawyer, and something that I stress very much is open and frank discussions about goals, about insecurities, about things that you may want to hide. Those are very important to disclose, because it at least helps strategize and get you to the right goal.
And, it doesn't have to be relinquishing control over those things necessarily, but it's in order to have a good partnership and do right by someone and be able to do that type of planning, you have to understand how all the pieces fit together.
Right.
And again, the only way to do that, the only way to help, and the only way to get help is to be able to be open and honest about that. And it's not an easy thing for a lot of people to do. We're all kind of trained to, hey, we don't talk about how much money we make. We don't say things like that, and it can be tough to kind of put yourself in that position.
Yeah, got to be a little vulnerable, right?
Yeah, that's the right word for it.
So, Sam, tell me mechanically how things work. So let's say there's someone went through a divorce, and they've got accounts at Merrill, they've got accounts at JP Morgan, they've got a retirement account through Fidelity. And someone says, hey, Sam, you know what, in terms of being organized, like you said, which is most important, how do you help people organize and sort of collate all their finances?
Yep. So the first step is going through that and seeing what you have, right? I don't have, like I said, I don't have to be involved with all of it, especially if somebody already has advisors that they trust or a situation that they feel strongly about. But one of the things that I can do is I help people get on a platform that it's able to pull all of that into one place, and give you access to all of that within one thing to see what's in front of you. Assets, liabilities, your income, cash flow. That's all the things that we're looking at. And we'll go through and review each one. First thing we'll do is discuss what the person's goals are and make sure that those items that we just described are in line with those goals. That's really one of the most important things that I do, is I make sure the strategies are aligned with the goals. There's no such thing as a one size fits all approach. And so we go through everything, really detailed review, and we see where you're at, what's working, what's not, especially if you're in a situation like divorce. Your role within your family has changed. Is what you have right now still meeting that? What needs to be changed? What needs to stay the same? High level, that's kind of what we're doing.
I like it. So when you say goals and strategy in meeting those goals, I mean, not my non-financial sort of thought is, when you say goals, are you saying specific goals like, hey, I want to save up to buy a house, I want to make sure my money lasts until I'm 90? I mean, like, what are some other goals that people?
So a great thing that I like to say are, goals are not money, and money is not a goal. That's a tool that's going to help us do all of those things in your life. Saving up to buy a home is a great example. Saving for your kids' college. Obviously, retirement is a huge one. It can be whatever. It can be a vacation home. Maybe it is just, hey, I want to pay off my student loans. I want to have another kid, 2, 3 more kids, whatever it is. You need to have your financial goals, your financial tools in line with those goals. And that's what helps you get there.
Yeah. And I think also, even before the divorce happens or a divorce happens, and just in general, kind of shifting back to my world and how you play into it and your role plays in, is sometimes I find it helpful to even have financial advisors sort of be in the trenches with their clients during the divorce, so they can kind of explain to them from a non-legal perspective, look, when we're negotiating, does it make sense to get more retirement? Does it make sense for you and your goals to obtain a different percentage of brokerage accounts or cash, or stay in the house, and have that feedback sort of if we're negotiating the agreement. And so to me, that's tremendously beneficial to have someone like Sam in your corner to at least advise and help create some perspective on just creating more of a real sense of what follows following this document called the marital settlement agreement. But one other thing, and Sam, I want to go back to it, is you have a unique perspective as a small business and personal tax CPA in all of this too. And so from my perspective, I think that's super cool and helpful to your clients, but explain to sort of people who are listening why you think that's beneficial in terms of everything.
It's a couple of reasons. One, I still, even being out of it, I get people who come to me with their tax questions all the time. Everybody has to file their tax returns.
Right.
And everyone is curious about what things are going to look like and what they can expect. And they want to help eliminate some of that uncertainty. And that's an area that people need help with. And it's easy for me to say, hey, here's my experience. And let me tell you, it's also a nice place where when I'm giving the other types of advice that I'm giving, I can speak directly to the tax consequences of those. Most people in the profession, and rightfully so, don't have that background. And so while a lot of people have a pretty good understanding about how certain situations may be taxed, they have to. A good person does. They don't have the experience that I have to really be able to show, hey, I've seen this before. I've seen what a return looks like. I've seen how this gets filed. I've seen how this practically gets treated.
Right. And even like, I mean, holistically, right? If we're thinking about wealth planning, right, and wealth management, it's obviously to optimize your money, right? So to have the understanding of the tax implications of withdrawals and how to structure some of your investments based on some of your tax knowledge, again, tremendously beneficial. And I think has some huge value in actually just a holistic wealth management and planning perspective.
It's again, and it's not to think it's necessarily something that I have to do for anyone. If again, you already have somebody that you can trust there, but it's to have that ability to have all of that together, I think is really valuable.
Yeah, makes sense. And I guess to that end, one thing that, when we had lunch recently, spent a lot of time talking about it. I find it very interesting because there's two real schools of thought, and curious as to your thoughts on the issue of life insurance, Sam, and specifically whole life insurance. And I guess as a starting point, in a lot of my judgments and a lot of my clients, a lot of the times there's a requirement to obtain life insurance to secure some obligation, whether that be maintenance, child support, kids' college, or other reasons as it relates to what would be in a judgment. But most times people either have an existing policy where they have to earmark a death benefit or obtain a new policy in that regard. So, what it came from my conversation is you are an advocate and you sort of subscribe to a school of thought where whole life insurance makes a lot of sense for people. And so can you explain to me, and I guess the people who are listening, what are the two school of thoughts? What's whole life insurance? What's term life insurance? And I guess let's start there and kind of get into it.
Yeah. So first, as far as school of thoughts go, I think I mentioned this before, but I am a protection first advisor. And the reason that I feel strongly about that is when we're talking about things like your goals of retirement and stuff down the line, we have a timeline that we can always get back to on that. It's a long-term thing, but God forbid something happens to you tomorrow. If you don't have something in place to protect you, we can't go back and fix that. So I always want to start there as one of the first pieces of analysis that we do. So yes, that brings up the question of term versus whole life. Term is exactly what it sounds like when you say term. It's for a finite period of time. You pay a premium, the amount of cash to have the policy in place, and you have a death benefit where if in that defined period of time you were to pass away, your beneficiaries will receive whatever death benefit you've decided based on your premium. It gets more expensive, as you can imagine, as you get older, to put that in place. the way that it started was you'd have kind of a yearly renewable term 1 year, and each year it gets more and more expensive. Now, most people are probably more familiar with you have a length of time over a number of years, like a 10, 15, 20, or 30-year term. It kind of takes the average amount of cost over that time. And if you were to pass away during that time, your beneficiaries receive whatever cash you decide. And if you don't, it's an expense to you like any other type of insurance. It is a very powerful tool to protect yourself against the possibility of dying too soon.
Let me stop you, Sam.
Sure.
Tell me about so term life insurance, basically, I always hear the analogy of renting an apartment versus buying, right?
Yep.
So under what circumstances would you say, look, and again, not the opinion of your group, just your thoughts and informational purposes, what scenarios would it make sense to say, I want a term policy in that sense?
Term policy exists because it's a relatively cheap way to get a lot of death benefit. And a lot of times it can be in the millions of dollars. If you are a young person, maybe starting a young family, that's extremely powerful to be able to have, because you're protecting the potential income that you're going to make over the rest of your life. If you're a 35-year-old, you're probably going to work for another 30 years. You die in the next 2 years, your partner, your children, whoever, an ailing parent, they were relying on that money. So it is extremely valuable to be able to have that amount of money at some point.
Got it. So more of an income replacement type.
That's exactly what it is.
Type thing in the event of a premature calamity, basically.
Yes.
So
it
then
does that one thing, protect you against dying too soon, better than any other product out there.
Got it. In a relatively cheap way.
Exactly.
All right. So now shift me over to, I think you guys call it indefinite life, right? Or what's it?
So they're permanent life insurance, and there's a few different categories within there, but the one that I deal with the most, and I think that we're going to talk about, is whole life insurance.
Right.
The first difference from whole life versus term life is in the name. As long as you pay your premiums, it covers you for your whole life. Technically, it's so age 121, but you get it. It's meant to cover your whole life.
Got it.
The other way that it differs is, rather than just being pure insurance and a pure cost, if you are not to die, cash value grows within the policy. So on that end, it is an asset. It's a diversification tool. It provides liquidity if you need it, but there's an economic benefit that grows throughout the life of the policy, even if you don't die, if you live. So those are the primary differences.
And same sort of analogy is, you're buying a house, you're building equity, you can use you against that equity. God willing, you pull the equity out. And it's something that accumulates over time. Whereas with a term, just kind of, you pay the premium, you rent the place, but if something happens, at least you get the benefit of that for a whole life.
I think the general thing that people say when they hear that is, well, why wouldn't I want to be covered for my whole life instead? Why wouldn't I want cash value to grow?
Yep.
What's the downside between, well, what's the benefits and what's the downside of doing that? It's primarily a cash flow issue. It's whole life is more costly to fund. In the short term, you lose a little bit of liquidity as you're paying for those death benefits. But in the long term, for a lot of people, it's a tool that can really make sense for them.
Right. I was actually talking about this with my wife the other day, but it's one of those things where, let's say, and it's sort of my own uneducated thought on it, where basically, let's say you get term insurance when you're 35 and you get a 30-year policy for X number of dollars. And let's say you live beyond 65, right? Whole life is more of an estate planning investment tool, whereas term life is more of a Band-Aid in the immediate. Is that a fair analogy?
I think that's totally fair. And let's speak, 30 years isn't necessarily just the immediate, right?
Right.
But it's that is most definitely what it is. The truth is, and it varies depending on who you talk to, but 1% to 2% of term claims are ever going to be paid out.
Right.
If you think about where you are, where most people, a significant majority, are at the end of those terms, and you've spent a lot of money and end up getting no economic benefit.
Right.
Versus something that gives you the option to have an asset that's growing over time. And again, as long as those premiums are paid, that benefit is contractually obligated to be paid throughout your whole life.
Right. So, I mean, if you're in the 98th percentile, basically, or I guess what is that, 98th percentile or second percentile? No.
Yeah.
So assuming you're in the 98th percentile of people, I mean, it's again, it's more of that wealth shifting mechanism and like more holistic estate planning and financial planning rather than an immediate. But like you said, I mean, how much does the premium differ if it's a healthy 35-year-old, for example, healthy 40-year-old, healthy 50-year-old even, and someone says, I want whole life now versus term life now, and what does that look like?
The costs vary, but they're significant. Typically, with the planning for most people, what we're doing is some combination of both. We budget to get a certain amount of cash into a whole life policy, and then we fill in the total protection amount that they need with term insurance. There's no, the amount of premiums in that what are going to depend on what your age is. But the difference between a whole life premium and a term premium can easily be 10 times.
Got it.
So again, it becomes a cash flow strategy. Where else have you been allocating your funds? What does the rest of your portfolio look like? What does cash flow look like? You have 3 to 6 months of expenses saved up.
Right.
So again, it becomes a tool, but ultimately and Jordan, this is that Ernst & Young article that I sent to you.
Oh yeah. Yep.
Ultimately, there are 3 reasons that I believe that portfolios ultimately perform better with whole life versus a buy term and invest the difference. One, it's pretty easy to understand the legacy of a death benefit, being guaranteed to you contractually, even if you live beyond 65, 75. It gives you the excuse to spend the money and know that those obligations that you care so much about providing for a spouse, children, charity, whatever it is, that's taken care of. It also, the returns that we talked about in that growth of cash value have typically outperformed other fixed income asset allocations like bonds, for example. And unlike bonds that have interest rate risk, a whole life policy doesn't. There's guaranteed amounts that are contractually obligated, and then there's also the potential of some extra growth with dividends, which we won't get into too much.
Yep.
So that's reason number 2. And then reason number 3 is because of what I just said. There's no interest rate risk or market risk because of the contractual nature of a policy contract. And so it gives you the ability to pull out liquidity even when the market's bad. Market goes down 30%, you're recently retired. We don't want to lock in those losses. So where do we pull it from? The thing that's not tied to the market, not tied to and those are ultimately the 3 reasons why over long-term strategy, portfolios that have some whole life insurance.
Makes sense. And I think that just sort of puts a bow on this holistic strategy where it depends on really your age, your cash flow, the assets that you have under management that you have to your name, and really what makes sense for you. And if your goal and what your goals are really, just kind of circling all back. And is it estate planning or something in the temporary is what I would say.
Right.
All kind of really relevant to the holistic estate planning, or not estate planning, but wealth planning model.
And just like you said, it's not this doesn't have to be an all or nothing thing. It's part of a whole holistic strategy. It's looking at everything and seeing what works.
Yep. Just like in a divorce, every client's different, every marriage is different, every situation is different. Again, sort of just one of those colloquial sayings that everybody's different. So don't, make sure you're consulting with somebody for that individualized and tailored approach. So, Sam, I think it's awesome that we connected. I loved reconnecting with you. I think you're crushing it. I commend you for that big shift in your career, and it sounds like you're doing great. And so if people wanted to get in contact with you, how would they contact you?
So they can, and I think I'll give you my contact information, but again, I'm at the Peach Financial Group. That's the name of our firm. I'll provide the website there. Can also, I'm available anytime on my cell, 847-840-1140. And also email, and I'll get you my email address too.
Yeah, and it'll be below in the comments section, so everybody can have that. Sam, once again, man, I appreciate it. Any wealth management issues, insurance issues, tax issues, here's my guy, Sam Pollack. So thanks again, man.
Thank you. Appreciate you having me on.
You got it. Absolutely.